Bro, I'm not gonna lie. For the past like 5 minutes, I've been trying to get the lighting right, cause I don't know if y'all can tell. I didn't even have a facial hair before, but I shaved and I feel that so chopped, bro. I actually feel so chopped. Like I don't know. Maybe y'all can't see a difference, but I definitely can. I don't know if it's this lighting or not, but I just look red and I look like bloated and I look like tired, bro. I'm about to go on my walk after this. But let me recap y'all's trade today. Um, today, all right, let me log it. Today took a winning trade on NQ. Took a loss yesterday. I'm sorry, I didn't get to recap it yesterday. But I'll show you my like I said, I'm gonna be more even more honest than I've been before, more transparent. So yesterday I took a $400 loss, and today I took a win, and also not just for like the trade today, but mentally like it was a pretty big step because I took a loss yesterday, yeah, but then immediately the day after, I really wanted to trade again yesterday. Like I took one trade yesterday and I lost it. I really want to enter again, like emotionally, like I. I struggle with that, so emotionally, I really want to re-enter and earn back some of the loss that I made, but I didn't do that, right. I just closed my computer and I went about my day. And then next day later, I see my setup. I take that trade and I win it. And now I'm able to win back the loss that I made, the losses that I took yesterday, and make a little bit more. And so that just tells me mentally that whenever something like that happens again, all I have to do is close the computer, wait another day, 2 days, 3 days when my next setup comes, and then I'll be able to, if I choose my setup correctly, if I choose my setups wisely without emotion, then I will be able to win that trade and make back the losses. So pretty big step mentally as well. And then for the trade, I really like today's trade as well. It was for me, it was around an A minus setup. Because for me, I need four things. Two of the things aren't really super necessary, but they're the things that make it an A plus setup. So the first thing I need, well, actually, let's do the bias first. So today, firstly, the bias, I was neutral right until market open. The reason why I was neutral is because we inversed this 4 hour gap here overnight, and so that kind of gives us a sign that we're going to be bearish and deliver lower, right? However, we have two fair value gaps on the 4 hour that are in more of a discount zone that are being respected. And when you're in an uptrend and you're looking for fair value gaps that actually have a chance of working more, you're going to be looking at the ones that are more in discount, right? Because why would buyers want to buy at a higher price than if they could buy at a lower price? So look for the fair value gaps when you're in an uptrend like this, that are in a deeper discount zone. And just because the one in a higher premium zone for value gap gets invalidated doesn't mean the ones at discount will get invalidated as well. It's actually a higher chance that they're going to be respected. Okay. And so because of that, we're bouncing in between these two fair value gaps. However, the thing that kind of told me that we were going to be bear or bullish for the day was right at market open. Actually, we get a classic turtle soup here on the 15 minute. We take out all this internal sell side liquidity. There's also a 1 hour for value gap here that we're kind of respecting, we're bouncing off of, and then a 15-minute displacement gap here. So we're souping these lows, and then we also put in an SMT. So we soup those lows and we put in an SMT on NQ. ES doesn't end up taking these lows. And so as soon as it starts rejecting back up and the 15-minute candle closes way up here, it doesn't even close below any near these internal low candles. That kind of gives me the final sign that okay, these fair value gaps are going to be respected, and we're going to be in a bullish trend at least for the AM session in New York. So now I'm coming into the market, coming into the macro session. This is why I wait for macro, right? Because as soon as market starts, if I traded market open, I probably would have been bullish or bearish. But I wait until 9:45 because that's when my time frame. That's the time I trade, and so it starts rejecting. I'm like, okay, now we're bullish, and now I have the correct buys because I was just able to wait a little bit more. I was just able to wait 10 minutes, bro. Just 10 minutes. If you wait 10 minutes, you can see a lot more of what the market really wants to do. Because sometimes if the market just dumps out like this, a few months ago when the market would just dump like this, it would just continue dumping, right? But now it's a little bit different. There's things called Judah swings that actually happen genuinely. Like manipulation can happen early on, when the market opens, and that's what we got today. And yeah, so macro starts. That's one of my other confluences that I need. It's in between 9:45 to 10:15. And then my second thing is that we need a unicorn model. I have a unicorn model today. We got to stop right here on buyers. We have a lower low. We have a low, high, lower low, higher high. Breaks this candle and displaces over it. We have a fair value gap over the short-term high, which is basically like a breakaway gap. It's even more powerful than just a normal fair value gap standing alone. And then even better, we have an inverse fair value gap here that kind of, it's just an extra add-on. Unicorn models don't necessarily need an inverse fair value gap, but this is just an extra add-on, an extra confluence, which is just, we can't complain about that. So once this candle displaces this high, I have two areas to enter, right? I have either this area to enter, this fair value gap here, right? Or I have this second fair value gap here I can enter off of. And then what did I say earlier? That the fair value gaps in a deeper zone and a deeper discount when we're in an uptrend, they're more powerful, right? Because a lot more buyers are going to buy there than they will at a higher price. However, it's not always guaranteed that we're going to seek deeper into discount. And so I could have either entered at this first fair value gap just to play it safe. However, then my risk reward ratio would have been pretty jank. I would have had to have my stops all the way at that low, and then this is like barely a 1-to-1, right? And so I'm like, okay, we're not doing that. However, if I wanted to wait until this fair value gap gets potentially tapped into, right? Because it's not guaranteed that this will get tapped into. The lower fair value gaps will get tapped into. I would have my stops there. A little bit of a better risk reward ratio, but it's not worth it, right? I don't think that's a huge, it is a pretty big difference, but I've had many times where I've waited until the deeper fair value gap with a higher fair value gap, and then we just never get tapped into. And so what I actually do here is I'm monitoring price. Okay, I'm monitoring price, and then perfect, boom, we have a fair value gap that forms here. Okay, now this is perfect. Now all I have to see is if this respects this fair value gap, I don't enter. If this gets inversed, then I enter, because that tells me that we're not going to retest any more fair value gaps here. We're not going to retest this lower one. We have enough buying power to just rip through this 1 minute fair value gap. We have enough buying power. That means we're satisfied with the amount of liquidity taken here. We've tested this fair value gap. We're satisfied. Boom, that's what the inverse fair value gap tells me. And then I entered literally off of that candle closing above that inverse fair value gap. My stops are above this candle low now, because I'm confident that if we end up retesting the fair value gap, we're probably going to head lower. So I don't put my stops at this low. I put at the candle low here. We get a pretty good risk reward ratio, 1-to-2. And then yeah, it's a pretty clean trade from there on out. I have my break even point at this high, my trailings at this. This was a aggressive. I was trailing a little bit before the price hits this. This was like an aggressive trail, and then we end up hitting London highs, which is a pretty clean trade today. Like I said, the only thing we didn't have here was a clean market maker buy model. Now we might have a pretty clean market maker sell model for FOMC when that's in a couple of hours. Wow, who is on my top step when it's in a couple of hours? But yeah, I probably won't trade because FOMC, because I took a winning trade today. There's no reason to have the potential to give any money back to the market. So yeah. Okay. All right. Well, that was the trade recap for today. Pretty quick trade recap. If I missed anything, let me know. If you guys have any questions, just comment down, and then I'll explain to the best of my ability. But yeah, I appreciate you guys for watching. Everybody enjoy y'all's day. Holy shit, I am chopped. And yeah, I'll see you guys later. God bless.